Welcome to the January 2023 portfolio recap. Today, I'm going to be going over the portfolio movement and dividend income received for this past month. I'm going to be doing these videos in a little bit of a different format, so I'd appreciate the feedback down in the comments below. But with that being said, let's get right to it. All right, first thing we're going to do is we're going to talk about the IBA, also known as my retire early account. I actually wanted to show you guys this in Fidelity, but the account number kept popping up everywhere, and I've been told before not to put the account number on the interwebs, so here we are. So I took screenshots of all this stuff, and we'll just go over the screenshots. So this first screenshot, I wanted to show you guys the holdings over here on the left side. I have 11 holdings in my IBA, and you guys can see the account balance down here in the bottom right, which is $27,045.20. So the next thing we're going to go into, we're going to scroll down here to the winners and losers. So the IBA, same account. My winners are ExxonMobil, AbbVie, and Illinois Toolworks, with a ExxonMobil has a 53.02% return, which is really, really good. AbbVie 15.18, and Illinois Toolworks has a 12.83. So all of those are really, really good. And of course, there's always a flip side of that coin. So the flip side would be the IBA losers, which you guys will see right here. So again, same account. Our losers for this one are NextEra Energy, Microsoft, and APD. NextEra Energy is down 8.1%. Microsoft's down 7.78%. APD's down that 2.37%. It's just, proof that, you have some winners, you have some losers. A lot of people don't talk about both, but it is important. I'm human. Not all of my stocks are winners. That being said, I am very confident in my losers that they will rebound nicely. So, of course, I've been buying the dip since 2021 happened. So, or I guess 2022 happened. So, nonetheless, buying those as they go down. And I did want to show you down here at the very bottom. This account, my retire early account, is still up 8.07%. So that's I started it in 2020. I actually moved it over to Fidelity in 2021, but started the account nonetheless in 2020, bought and sold, learned a lot of lessons, whatever. And through all of that, we're still up 8.07%. So looking really, really good on there. And then the next thing I wanted to show you guys is the year-to-date performance of this account. So you guys will see we have time-weighted returns up here, and we also have the money-weighted return. What I've learned is that the money-weighted return is really what you want to evaluate your performance on, because you do have the ability to put money in and take money out of your account. So that's the one we're really going to focus on. You'll notice here that the time-weighted and money-weighted are actually even, and that's because since the turn of the calendar, since January, I have not added any funds to this account. We'll talk about that a little bit more later in the video, but so year-to-date and year-to-date for money-weighted and time-weighted, like I said, is the same at that 7.06%. And then down here at the bottom, we can actually compare that to the market. We have the S&P, the Dow Jones, and the NASDAQ, which are, your typical big three. We're actually outperforming two of the three. We're outperforming the S&P, which is the one you really want to outperform, in my opinion. Dow Jones, we're crushing that one. And then the NASDAQ's having a really good year so far. It's tech heavy. Tech's been doing really good in 2023 so far. So I just wanted to share all those with you guys. And then the next thing we'll do is we'll go over here to my spreadsheet. So this is a custom built spreadsheet. A lot of the information here is the same as we see on Fidelity, but I do think it's a little nicer on the eyes. And I also think it has extra information that is just nice to have. So I could be biased. I made the spreadsheet, but really what I wanted to show you guys here is I wanted to show you, if you take note to the percent of IBA column right here, you'll notice that these are pretty close to nice round numbers. We have 11, 10, 8, 8, 10, or 11. And if you actually, I want to explain how I do that. So down here at this chart I created, this is my allocation chart. Basically, it's pretty simple, I think. So I took the total number that's in the account, the total invested up here, that 2527. It is divided by the percentage of the portfolio that I would like it to be. And that tells me how much each of these positions should be worth. And then over here is telling me, based on the cash I have left to invest, or the difference, I guess I should say, between what these should be worth and what they are worth, here's what I need to add. And then the difference between this column and this column is this one is my dollar cost average strategy that I do every day. Again, when I am investing in this account, I literally add money at the end of the month to invest for the next month. And I divide it by the number of trading days, because I can't time the market. I'm not a genius. And I also hated when I would pick a certain day to invest and it happened to be a green day, and then I'm buying everything that's more expensive. And yeah, I couldn't time it. So I was like, you know what? I'm just going to divvy it up. We're going to invest every day. Some are green, some are red, but I'm investing every day. So I don't really miss any boats if I'm on all of them. So I just wanted to show you guys that really quick. And then the next thing we can look at here is the average number of shares and total number of shares. So I do have fractional shares, as you guys can see right here. And weirdly enough, all these fractional shares in 11 different holdings actually equals 168 even shares, which is cool, I guess, if you're into that. All that translates into 15.2727 repeated average shares per company. As you can see, Next Air Energy has more and Air Products has less. So it really doesn't matter. Those are just extra numbers to track because why not? And then right over here, you'll see that I have the current dividend yield and my yield on cost. The current dividend yield of my holdings, if I were to start this same exact portfolio today, would be 1.78%. And my yield on cost due to starting the portfolio not today, and then capital appreciation and dividend growth and all those things is 2.01%. Dividend yield 2.01 might not move the needle for a lot of people. To me, I don't need the money for a very long time, so you can already see that my yield on cost has grown, and this has only been 2 or 3 years. I don't need it for another 22 years, so I can really get excited about what this will be in the future. So yeah, 2.01% is the current dividend yield. And the last thing I want to show you guys over here in the gold boxes is the projected monthly income for this portfolio. I'm at $494.79, $41.23, and $1.36 per day. Whichever one of these really tickles your fancy, you can look at them. I have all three just because it's cool to see the breakdown. You get the different milestones different times. Like I'm really coming up on that 500 per year, and that's really the next closest milestone. And then I'll hit 500, then I'll come up on $50 a month, and then $1.50 per day, and so on and so forth. But I do have those over there, and keep in mind that this is without adding any additional funds to this IBA for all of 2023. This is with getting no dividend increases, and this is with not reinvesting any of the dividends I do get. So we're looking at, $500 give or not really give or take, really $500 give that I could be making this year in passive income, which is really cool just this early in the journey. So, and as I mentioned earlier, I actually don't have any buys in this account. The reason for that is I always max out my Roth IRA and my HSA first. It normally takes me anywhere between like April and June of this year before I have those max. And once I do that, then all the money that I do invest for the year just goes right into this account. And I kind of, full steam ahead and get it, as much funded as I can for the year. Since this is my retire early account, I plan to retire at 50. I am 28, so we have 22 years, as I mentioned earlier, to get that done. All right, next we're going to go down here to dividend tracking IBA, and we're going to see who paid me for the month of January. So we can see over here that we have January for 2021, I made $3.45. For January of 2022, I made $4.33, which is a 25.5% increase from year over year. And then this month, I actually made $12.03 just in January, which is a 177.8% increase from January of 2022. So again, it's all about those growths. The numbers are small. And I always say, as the numbers are small, when you're just getting started dividend investing, really important to focus on the percentages, because your percentages will be, or should be, pretty wild. Not something you're going to, I'm not going to have 177% increase, 10 years into this thing. But my numbers, my actual dollar amounts will be bigger, and then you can switch your focus to that. And then, yeah, if you really wanted to compare like the first month of a quarter to the first month of another quarter, like the last one, that would be October. And in October, same first month of the quarter, I made $9.88. And again, we're up to that $12.03 this month. So we're doing really good there. And my payer this month was actually Illinois Toolworks. I can go over here to this one and show you right here. So we had Illinois Toolworks pay me $11.98 on the 12th. I dripped it and got me, 0.053 free shares. And then I also got 5 cents in interest from the government money market. So that's where I got my money in January. All right, so next up is the Roth IRA. So you guys will see here, it's the same format for this one. This is the one I've been adding money to. And if you guys actually watched my December dividend recap, I actually rolled over my previous employer's 401k into the Roth. I'm going to take the tax hit this year because I don't want to deal with it later when I'm actually making more money. So we're going to bite that bullet. Haven't done my taxes yet, so we'll find out exactly how big that bullet we're biting is. But nonetheless, I do have a lot of money. You guys will see right here, $26,000 left. That's after, a little bit of February. This is the 4th I'm recording. And then all of January worth of throwing money into here. We'll actually see how much I spent in January here a little bit later in the video. But Nonetheless, same thing. Here's my investments in the Roth. I typically do a hands-off approach in the Roth. I do a lot of ETFs, minus Tesla being my only individual holding. So we have QQQJ, QQQM, SCHD, SPYG, Tesla, VNQ, and VOO. So those are my holdings. Down here's my account balance, $46,616.47. Then again, we're going to get into those winners right here. So my two biggest winners, and this is kind of weird to me. So Tesla is now my biggest winner, and I don't know if you guys own Tesla because it's not a dividend payer, so I don't really talk about it too much. But Tesla has exploded in the last month for whatever reason. Maybe people just got tired of being mean to it, or maybe it's not justified. I don't know. I'm not mad at it though. I was down 50-60% in Tesla. I've been adding, all of January, and now I'm up 8.32% in it. So that's really cool for me. And then SCHD, all reliable. I'm up 1.55%. That's including some pullbacks and stuff on that. So that's cool. Those are my two biggest winners. And then we go down here to the Roth losers. And it's SPYG and QQQJ. I'm down 11.37% and then 9.04% respectively. Not worried about these. Again, this is so last year I had all my money invested by April in the Roth IRA. And then we had a big drop. So I was down 20, 30, 40, 50% in a lot of these positions just because of timing. And this year I'm back to adding that money. I'm going to have all of it spent by the second week of June. The point behind that is just to get those dividends. I'll get the full dividend in June, the full dividend in September, and the full dividend in December for all of these accounts because they happen to all be, those 3, 6, 9, 12 payers. So there's your losers. And then I'm going into the performance from the Roth. Let me see if I can line this up better. There we go. So same thing. We have the year-to-date performance. My year-to-date so far for the Roth as of January 31st is 3.02%. So we're not beating the S&P, we're not beating the NASDAQ, but we are beating the Dow Jones. Like I said, this is a different kind of portfolio. I don't need this money for longer. So where I need the IBA money at 50 when I retire early, I don't need this money. I can't really need this money until 59 and a half because of the penalties and stuff. So this has an extra, 9.5 years to grow. So the ratio of like how important it is to beat the market this early isn't as important for me. I'm just really worried about building my positions. So preferably I'd like everything to go down another 90%, buy in all those stocks. And then, it goes up, 20 years from now and I'm rich. So that's the plan for that. And then we'll go here to this spreadsheet. So this looks identical, but it's actually the Roth IRA spreadsheet. Same thing. We have all your information pretty much the same as Fidelity. I just think it looks nicer. And the balancing down here is the exact same as well. I have how much I want. So I actually reallocated in 2023. I have 10% in each of the holdings and then 40% in VOO. So that makes out, 100%. Here's what those should be worth based on the amount I have in the account right now. Here's how much I have left to make that happen. And then I have 48 days. I'm going to invest, every day until June 13th, as I mentioned before. And that's how much I'm going to invest per day. Now, this is not including any money for the 2023 Roth contribution limit, that 6,500. I haven't added any of my money there yet. I'm waiting to get situated in the new job and stuff like that. And then once I get that, I'm going to try to get that maxed out sooner the better, no later than June. I just really want to get all that money in there and put away. So there's that. And then we'll look here, the same thing. We have the total shares and average shares. This one doesn't come out. It almost comes out really nice. We have 243.99 shares, which is weirdly impressive that we're getting this close to an actual full share. And we have, 7 different holdings, all with fractional shares. So 243, basically 244 shares, 34.85 per average shares, and then we get into the total shares. So I'm up almost 100 shares since last year, which is December, which is 1 month ago. Average shares is up, 13 shares. And then over here, we can see my current dividend yield is 1.79%. My yield on cost is actually 1.76, and that's because most of my positions are down. The one that's actually up the most is Tesla, doesn't pay a dividend. So I'm not worried about it. Like I said, this has even longer of a time horizon, so I'm really just trying to get the money in. We're worried about the yield and stuff later on. But speaking of that, we have over here the projected income. So we have $305.07 per year, $25.42 per month, and 84 cents per day. Again, little victories here. This is obviously going to grow slower because I can't put as much money as I can in my individual account, minus the 401k conversion. Obviously, $25,000 is left to spend in here right here. So We have time for that. And you'll see right here, as of December of 2022, I was supposed to make $135.64, and I'm already up to 305.07 just in 1 month. So I still have that 25,000 to put in there plus the 6,500 from my just 2023 contributions. So we'll get this one. This will be cranking by the end of the year, that's for sure. All right, next thing I'm going to do is I'm actually going to show you what I bought in the Roth account. So here's those holdings that I was talking about, the QQQJ, SEHD, you know, the things. So I was actually, these are the number of shares I was able to buy. So I actually bought 80.051 shares just in January. I spent $8,356.52. This number down here, the average price is pointless for the total, but you can see my average price per buy. So I think Tesla's, I don't really know what Tesla's trading at. I think it was like 170, 180, 190, somewhere in there. And my average cost all month is $138. So that shows you I was really buying it when it was low. Then again, I buy every day. So as it was going up, I was buying the whole time. I'm just not smart enough to time the market. You probably shouldn't either, but not financial advice. All right. So next we're actually going to go over here and I want to show you who paid me in the Roth IRA for January. So I actually got okay, so actually if we go over here, dividend tracking, I made $109.36 this month, and that was all off of interest from the cash that I have sitting in that account. So Fidelity does that where your cash just gains interest on there, and it comes over and gets added back to the cash balance. So yeah, $109.36 of money that I was not expecting, which is really, really good. So quarter one of last year, I only made $21.90. So I'm already 399.4% up on that. And I didn't even get paid for March yet because it's not March yet. So you can see, yeah, the $109. And then down here, I made $139.82 for all of 2022. I'm already $109. I didn't invest all the cash that I have to invest. I didn't contribute yet. And we haven't even gotten paid for March, June, September, or December yet for this account. So the future is looking very, very bright for dividend income in the Roth IRA for 2023. All right, and as I mentioned earlier, I don't have anything to go over in the HSA or the 401k. I just switched jobs, so I'm trying to get settled there. Once I get information there, I'll do another higher level overview of those accounts. But until then, I wanted to actually look. This is all of my tabs I have down here, the Roth IRA, 401k, HSA, they all fold into this final tab, and it's auto updated based on the information I put on there. That way I don't have to, keep updating all these different tabs all the time. So I really go in here, I update the Roth. As I update those numbers, it comes in here and it updates these numbers, which is very simple formula, but very nice. So I don't have to waste a ton of time updating this, even though I love updating my spreadsheet. So really what I wanted to show you guys here, because all this is, the same information. Here's your IBA account. Here's your Roth IRA. So I really wanted to just show you the total number of shares. So I'm up to 619.422 shares, 28.156 average. And down here, you can see this is the end of December at 2022, the end of 2022. I had 518 shares and 23 average. So I've averaged, adding 5, and then I'm up over 100 shares just in 2023, and it's only January. So same thing down here. We have the dividend stocks. 65.349 of my percent of my portfolio is dividend stocks, are dividend stocks. And it was at 53, almost 54% as of December. So we're really, really plugging away at getting those dividend stocks in there. Over here, this isn't going to change too much because I didn't really add anything different. So I mean, there's small amounts of different there. But there's a big amount of difference here. We have $931.66 is the projected income based on adding no more money from me or the dividends, or quite frankly, even adding from the cash that I have sitting in the account, that 32% cash, which is really cool. I was at $745.30 projected last year, and I'm already up to $931 this year. So that's looking really, really good. We're going to easily hit that $1,000 this year for the total portfolio. And we'll see how close we get to that we'll see how close we get to that with my retire early account rather. And then the last thing I wanted to show you guys is one of the last things I wanted to show you guys is the same thing. It's the portfolio tracker. This is all of the accounts, the dividend income received from all of them combined. And you guys will see here that $121.44, and that's compared to just $4.33 for January of 2022. Which is 2,704, 2,704%, almost 2,705% year over year increase. Like I said, the numbers, when they're this small, the percentages are really, if you can just get those percentages to triple digits 4 digits, like all that kind of stuff. That's ridiculous. That's really, really good rates. Don't expect that once your portfolio gets bigger and bigger. But like I said, you switch your focus to the bigger dollar amounts coming in when your portfolio gets that big. So yeah, we're already $121.44 for the quarter, which is more than I made in Q1 of 2022. So we're already at 54% better, and we don't even have February or March in there yet. March is a really big payer for me. So all right, and the last thing I wanted to talk about before we go is any dividend raises that I got this month. So in January, I actually got an 8% dividend increase from APD, where they went from $1.62 per share per quarter to $1.75 per share per quarter. And that's the reason that we do this. That's the reason that I do the strategy that I do. Not only do all the companies that I own pay increasing dividends every year, but they all have high dividend growth rates. So that's an 8% boost to my portfolio if literally nothing changed the whole year. Which that's, obviously not the goal here, but that's just really, really good news. But that's going to wrap it up for this new style of dividend review. Be sure to leave a like on the video if you guys enjoyed the content. Subscribe and ring the bell so you guys can stay up with all the dividend related content, as well as following along with these monthly recaps for my actual portfolio. Feel free to use that comment section down below, again, to let me know how you enjoyed this portfolio recap like structure, and then also let me know your January numbers in the comments. But until next time, see ya.